comments. And then again, we'll do this this week and then the next couple weeks to cover all the different chart mechanisms we have within IVolLive to make sure everybody is fully utilizing those tools. So right before the webinar, I just logged in as if I was a new user. So we are, this is the friendly concierge welcome message that we are always greeted with here if you are a new user. So here we go. Welcome to IVolLive. Just some basic housekeeping here. All of the major tools that you'll want to access are here on the left. They are also here in your toolbox from your dashboard. Today, we'll spend most of our time within IVolLive. Last week, we spent most of our time within the P&L calculator. A week before that, we did the stock sentiment. So again, in these Tuesday sessions, we tend to cover one of these in detail. Depending on your preference, there's different things you could do, expand or contrast views. You can also go night mode or day mode, depending on what you prefer. And then we are always available at support@ivolatility.com. Whether you're a current user or whether you're not a current IVolLive user and you'd like to register, just shoot us a note, support@ivolatility.com, so we can get you going. So here we are in our dashboard. Some important things when you log in are always our most updated webinar information will always be here. So again, we do a different topic every week, every Tuesday. Today is charts, and then next week will be charts part 2. And then, again, we'll cover one of these major tools any given Tuesday, like stock sentiment analyzer, P&L calc, real-time spread scanner is a popular one. Data download is great, especially if you're into, back testing, some strategies. And then of course, our daily updates, which are below. But once you log in, all you'd have to do is click on that flashing button, and you'll always see the next available webinar. We do limit seating, so that way they don't get overwhelming with attendance. And so it's important to go ahead and lock your spot in ahead of time. Just a couple more things as we're on this page. If you are brand new, latest news. So we never give our crawlers a day off. So this runs 24/7. It scours and scrapes the financial news sites for interesting headlines. So as I'm drinking my coffee in the morning, this is the first thing that I tend to read through, and I find always one or two interesting ideas to explore within the IVolLive platform from this latest news. Other thing I want to draw your attention to is news and research. This is different because this is us doing the analysis on using our IVolLive system. So here I wanted to spend some time looking at tech examples today, some big tech names. In my webinar last Tuesday, I kind of talked about why I thought, nobody should go bullish on Microsoft, like it was a bad time to go bullish, but, potentially a good time to go bearish. That trade worked well. And so I wanted to kind of recap, how I used IVolLive tools, to make that determination. Because at the end of the day, the reason why we use IVolLive is to enhance our trading. Like we're only in this, and this platform is built to be the go-to data and analytical tool for options traders. So that way you can do the analysis here and then enter the trade with your broker. And so again, we covered Microsoft, which we'll talk about today. And then in the end of these editorial pieces, what's nice about them is we say, okay, here's all this info, but here's potential ways to play it, right? Like, otherwise, what's the point of reading if there's no key takeaway that we can use to potentially put on some trades? So those are always very interesting articles. As long as you're on our email list, they also get emailed to you. But if you miss them or you have a cluttered mailbox like I do, this is a great way to access those, and see some current themes. Over here, account details would be, where we have your preferred contact information, your credit card info for your subscription. IVolLive is where I want to spend the bulk of our time today, looking at how to access charts and what chart features are available within IVolLive. Again, if you are brand new, what you'll see is the stock monitor tab. That's going to be your default. The stock monitor tab is great because it allows you to look. You'll start off on this custom scan, which is a view that you can customize based on your preference. And then it has all these different shortcuts where you can run these very powerful scans with a click of a button, right? Top stocks by volume. So that's going to show you where the options volume is, and you can choose from any of our groupings within IVolatility. And as as you know, likely at this point, we have a huge universe, from US to Brazilian to Canadian stocks, European, German, Indian, TX60 here up with our friends north of the border in Toronto. We also have, the IVX mean versus the 20-day historical volatility. This is a popular scan that a lot of our users run because it shows them kind of what the future, IVX 30, what the next 30 days look like volatility-wise. And then it shows what's happened in the past, and then you can run the scan. I was running it against the S&P. I like to look at anything over 2, and that tells me that IVX, the future's twice as volatile as the past, right? And so there's some really interesting things you could do with that information. You could do a reversion to the mean trade. You could do a continued breakout trade. So I typically get 1 or 2 decent ideas from this IVX mean versus 20-day historical volatility scan. We also have the IVX historical range. This is like a 52-week range for a stock, but it's for IVX. So you could see Dollar General is here at the top. It's had a low of 1957 on its implied volatility, a high at 3682. Right now it's at 3794, so it's actually trading at a new high for implied volatility. You could see that is put in simple percentile terms for you right here. IVP, a lot of people ask me all the time, what's my favorite column within, IVolLive, and it's IVP. And the reason is because it puts this implied volatility measure in context. And it tells me that specific to Dollar General, 99.6% of the time, Dollar General has been trading lower than this implied volatility level, this 3794 over the past 52 weeks. So over the past year, 99.6% of the time, Dollar General has been trading lower than this implied volatility, which means something's going on here that merits further investigation. So Dollar General would be an interesting one to jot down, for further review. IVX changed from yesterday. This shows where the action is today in this moment. So we have 3M, Salesforce, Verizon, JP Morgan, Boeing here at the top. This is saying that 3M has had a 7.3% change in its implied volatility day over day. Again, what this is telling you is something is going on that can merit further investigation. So within this stock monitor review, what's great about this is I showed how to do this last week, how to use the stock monitor to run these different scans to get a list of trading ideas. And then as you start building these different ideas, because the other scans you can run here, these screens, is you can look for names within this group. So I was looking at NASDAQ that have implied volatility breaking out. So you could say, okay, I'm an intermediate term trader, so I want to go with IVX 30. If you're a long-term trader, maybe you go with IVX 180. But I want to see names within the NASDAQ with their implied volatility over the past month that are showing a 10%, pop, they're breaking out. And it's going to organize that for me. And I can see Gilead's at the top, followed by Lululemon, Costco, etc. I could do the opposite. I could say, all right, so when an implied volatility is breaking out, that means options premiums are getting more expensive. When it's collapsing, that means options premiums are getting cheaper. So if I wanted to buy volatility, because now it's going to be trading at a cheaper price, I could get a little bit more extreme. I could say, well, where has implied volatility dropped, by 20%, right? And I could see that's Google, CGen, Gilead, made it here too. So Gilead's been volatile. That's what that tells me. But in general, this means that the Alphabet Class A premiums are going to be lower now than they were 30 days ago because its implied volatility is going lower. You could search by high call volume over the past, say, 60 days. If you were looking to do, an intermediate analysis, you could do the opposite, high put volume. And again, highest call to put, highest put to call. So these are different built-in screens that I showed how to use last week. And the bottom line is they're great, as we put together a watch list. And once you have an idea that you want to, for your trading list, you could say, okay, 8/1/2023 chart trading ideas. And these would be ideas that we want to explore further. So what will happen is when you create that, it's a brand new group, obviously, so it's blank. So now we would need to add to it. We could see 7/27. These were some of my ideas from last week, but now we are in a fresh week. So let's go ahead and populate that. Again, as we saw things, Apple was interesting. Potentially Boeing showed up on those lists. So again, if we just went through, I'm just going to skip through this because we covered it in depth last week. But if I did want to add those 3 names, I could select, just put those little check marks by them, come here, add to this list. And then voila, those three names have been added. If I wanted to take one away, I say, well, wait a minute, J&J didn't show up on any of those screens. I clicked on it by accident. I could just remove, and now I have those two names. Other things you could do, if you have a file, like an Excel file or Notepad file or something with an ongoing list of names you're interested in, you could just come here, open that file as long as it was saved in CSV format, select a group you want to add it to, and hit add, and then those names would populate here. Other things I was doing ahead of time, I told you we've been doing a lot of research on tech, so you can also manually enter them here. Microsoft, we covered in depth last week. Tesla's always an interesting one. Meta, for reasons I'll explain. NVIDIA. So these are the ones that I had kind of pulled up to use as we demo today in the webinar. So as you have a list and then you want to click further and dig deeper, you would just click on the name. What this is going to do is pull up our first kind of chart view. So first, before we get to the chart on the left, you'll always have your fundamentals. So this is going to give you things like price, market cap, dividend, price to earnings ratio, 52-week high low. This is for the stock, not for IVX. And then historical volatility, options volume. You can always add to these here by clicking on this gear icon. In general, throughout the platform, you'll see these gear icons where you can add different inputs. For the fundamentals, it's an alphabetical order for you. So if you're interested in open interest, if you're interested in change percentage, day over day, if you're interested in the dividend, IVP, which I told you guys I love, and shares outstanding was down there, IVX change percentage. So basically I could just toggle anything that I want to green. I can apply that to this one tab, meta, or I can save as default for any tab that I pull up. So just apply, and here we go. We see now we have the earnings per share, we have the dividend, which is 0, and then we have our IVP as well. So that kind of updated here in real time for me. So again, that's fundamentals. We could do a whole webinar on fundamentals for sure. But right now I want to mosey on to the charting view within this stock monitor view is what we call this, the stock monitor view. So we have charts in a couple different areas. We have the one here, obviously to the right, but the ones that are a little less known are down here, and so I'll show what those look like. Now we can look at it. So we have we have meta and the different things available to us. This is our options chain view down here. So we have our all expirations. This is like if you were in your TD Ameritrade account, for an example, you could filter between all available expirations, leaps, if you're a long-term trader, or the nearest expiration terms, which of course are here, August 4th, which is this Friday. You'll default to the 5 strikes around the current price, which is 322. So you can see 5 strikes here. You could go to all strikes, which is going to make this a lot noisier because there's so many different strikes for meta. Go back down to 5. You could look at calls and puts, or just call or put. So again, this is another way that will show how to access charts. But for now, what was interesting when I was doing some research this week is NVIDIA. Let me go to NVIDIA real quick. So if we pull up the chart for NVIDIA has been on an absolute tear. Ever since it announced, its kind of dominance with its AI chips, and AI has been, front page news for the past few months in the market, and anything kind of AI related has taken off. You could see with this chart, what's beautiful about this is with an IVolLive subscription, you get 5 years worth of spot price data, which is here in blue. This is spot price. You can see it's been on an absolute tear this year. And you also get 5 years worth of implied volatility spot price data. So this is IVX 30. So you could see, where, this inverse relationship in play, where you have volatility when it spikes, we have price going lower. When price is spiking, volatility is going lower. So that's a key kind of relationship to keep in mind. And then you also have 5 years of historical volatility, which is an orange data available to you. So again, you can see these big long-term trends. You can kind of mark these trends. So you could do with this view. This is a question that did come up before the webinar, is which charting view are you able to draw on? and it is this view that you can draw on. So what's cool about that is, if my line doesn't get away from me there, we can draw different trend lines. We could do, width, so we can make that a strong line. We can make it a dotted line. I like this solid one though. We could have our arrow, pointing in either direction. So maybe this is our up arrow showing our uptrend. And then there's all kinds of other things that you could do, from this particular, depending on how much of an artiste you would like to be. But this is the view that you can mark on. And I'll show separately the charting tab, which is amazing. It's very, very valuable. It's just you can't draw on that particular view. So here you could do things. What I like to draw is I like to draw things like trend lines, so like I would have drawn this one here, this downtrend. So then, when we saw price come down here and then price break above, this started a fresh uptrend. The other interesting thing I like to draw from this view is I like to draw discrepancies, so right now we have this massive discrepancy in price and implied volatility. So implied volatility, is relatively low, but it's gone higher over, you can see where it's crossed over historical volatility. So as NVIDIA is going higher, so too now is its implied volatility. And that's interesting because that could signal a potential reversal in trend and price and a drawdown, because when implied volatility, really starts ratcheting up, typically that means a large movement can happen either way. Now, that also means the price could continue higher. But in my experience, when implied volatility goes parabolic, typically it shows a reversal in trend is coming. It's kind of a precursor for that. So I like to draw kind of the discrepancy or the gap between price and implied volatility. We could also do, the gap in implied volatility and historical volatility, where it shows us that IVX is a lot higher than historical volatility at the present moment. So these are a lot of the cool, interesting things you can do from this charting view with drawing. Here's all the tools available to you. You could do text box, you could do arrows, rulers, and then we can also save this, right? So we can take a snapshot of this. We can save it to our computer and our trading journal. I could tweet it if you so desire, and then go from there. Now, I also want to show, using the same view, what was interesting to me about Meta in particular. So Meta and Tesla, what was interesting was both hit their $1 trillion. So we've been doing some research on $1 trillion tech, is what we call it. So tech names that have hit $1 trillion market cap, because NVIDIA just recently this year hit that $1 trillion mark. And not many companies have done it. But what's interesting is when you go to this 5-year view, you could see where it happened. This is where it happened for Meta, in 2021. And then there was this big drawdown in price, right, as Meta just kind of crashed down to the floor. So again, come here. We see where the downtrend really took off. And then we come here and we could see where the uptrend in price began. So it's going to be interesting now is with this retracement, it's like a reverse head and shoulders pattern on the price, on the underlying spot price. So what's going to be interesting is if Meta could continue marching higher and then become $1 trillion name, once again, and surpass its past highs. So as this trend is going up, we see implied volatility has been going down, which is interesting, because that means, volatility is going down, options prices are getting lower, spot prices going higher. So there's less likely to be a reversal in this uptrend for Meta than there is in NVIDIA. So, if I was looking to put on a trade just by looking at these charts, implied volatility and spot price, I might be looking to go bullish on Meta and bearish on NVIDIA, just as a general, example. Other cool things that I like, when we were looking at Microsoft last Tuesday, and we ran all sorts of scans, and Microsoft showed up as interesting. And why it showed up was interesting. We've been looking at 5-year and 1-year charts. Let's go to a 3-month, because you could see as much, you could go to 5-year, but you can also get really granular down to 24-hour charts, if you're a very short-term trader. But 3-month is what we're looking at. And what we saw was we saw this interesting development where, Microsoft's price had kind of peaked and had started to come down. And what happened at that time when we were doing the webinar was the price had broken below this implied volatility line. And typically when that happens, when IVX is still going up and price breaks below it, it typically means a sell-off is coming. And sure enough, what you could see with Microsoft is it sold off, it bounced a bit, and then it's continued to sell off. It's had another little minor bounce, but it's now turned lower. And so this was kind of our leading indicator that something was about to happen. When we saw price turning lower, and then we saw IVX continuing higher. This is like one of my favorite trading signals to identify, within this charting view. So I also want to show something that's super unique within this view. What we can do is we can get we can tell a lot with a little. So we're able to isolate the implied volatility. So before I do Apple, I wanted to show this is a chart that I pull up every day before I do any trading, any analysis, anything. I pull up a chart of the VIX. I pull up that tab here, and this is my favorite chart to look at within this charting view. So I want to demonstrate that real quick. What I do is I come out typically to this 1 year period, and what I'll do is I'll eliminate historical volatility for the VIX, and I'll eliminate the underlying spot price for the VIX. So this is the implied volatility. That's all this is, the implied volatility of the VIX. And so this is like the fear gauge of the fear gauge. And then what I'll do is I'll add a couple different technical indicators, to this view, like Bollinger Bands, stochastics, or RSI. You can scroll through, or you can just type in and click. And here what we're doing is we're applying technical analysis to the fear gauge of the fear gauge. Reason why this is important is it gives us a leading indicator of where the VIX is going to go, and where the VIX goes, the market goes, right? So the higher the VIX, the more panicked traders are. The lower the VIX, the more complacent they are. And what I'm looking for here is extremes. So right now we're kind of on the lower end of its trading range, of its likely trading range. So what I'm looking for is for the VIX, the IVX of the VIX, to either break below this Bollinger Band. And if that happens, and it goes below, say 30 here on the RSI, I'm going to go long volatility. If it breaks above its upper Bollinger Band, I'm going to go short volatility. And so the way to think about this is, again, when IVX is going higher and the VIX is going higher, options premiums are more expensive. So it's a great time to be an options seller. When it's going lower, options premiums are cheaper. So it's a great time to be an options buyer. So this is some of the key takeaways for the chart. So you can see, any given morning when I do this, like when I saw this move, I knew that it was only a matter of time before the implied volatility of the VIX went lower, which meant it was only a matter of time before the VIX went lower. And as we could see, that's exactly what happened. And it's kind of chopped sideways ever since. But that's a really, really neat view. And I don't know anywhere else where you could create kind of the fear gauge of the fear gauge. But what's cool about that is you can do that for any underlying stock or index that we cover. So you can, come here to Apple, right? One of the most popular liquid names out there. You could see this, relationship. This is a really good example of what happens when price just marches higher. You can see volatility just gets whacked lower as price goes higher. But what's neat here is we could say, well, what do we think? Do we think that this uptrend is going to continue with the spot price? And to do this, we can eliminate historical volatility. We can eliminate a spot price. And now what we're looking at is Apple's IVX. Here is the underlying volume measures, right? So this shows you how many shares have traded for Apple, each individual tick, each individual day. And then we can also add, let's go back to those same ones we used on the VIX. They're very, I think, intuitive and easy to use. Relative strength index, and then we'll add a few more. We could also do MACD. So now this chart tells us a lot with a little, right? Because this is the implied volatility of Apple. And we could see what's the next likely move, once we get to an extreme. Right now, it's middle of the road. Apple's implied volatility isn't trading really at any kind of significant peak or trough. or extreme, but what is happening is that we're getting this consolidation here. So what I would do if I was trading Apple, which I do, then I would circle this, right? And then I'd come here and I would save it under Apple in my trading logs, because what I'm doing is this, as this coil's tighter, it's going to break one way or the other. So what I'd likely do is design some kind of spread trade that benefits from a break, either up or down. I'd also look at like upcoming earnings, things like that, to help time the trade. But this reading on Apple's IVX isn't really at any kind of extreme, which is good, because sometimes the most important trades are the trades we don't make. Like there's no clear signal for me here to go bullish or bearish on Apple. And so those are some of the cool things you could do using these technical analysis tools on the company's IVX. Because remember, this is Apple's implied volatility. This isn't its spot price. So again, knowing where implied volatility is moving can help us go long, short, or put on a spread trade on Apple in this example. Tesla is always a popular one. So I had it pulled up prior to this webinar. So if we go to it, I'm going to it with fresh eyes. I didn't have a chance to look at it before we went live today, but we could see, I'm on this 1-year chart. We could see where price, cratered at the end of 2022, going into 2023. Implied volatility went nuts, as did historical volatility, of course. This is a beautiful kind of display of that inverse relationship. And then price came up. We had like a reverse head and shoulders here. It kind of chopped down, and now we're off to a fresh uptrend. But you can see how volatile this name is. This is why it's so popular with traders. So this is another good example. Let's eliminate Tesla's spot price and eliminate its historical volatility. Let's add those same indicators here. So we could do apples to apples. And then we had MACD. And now let's see what our tea leaves are saying. Okay, so we have implied volatility kind of bouncing around the lower end of the Bollinger Band. We have it at the lower end of the RSI, and then the MACD is also kind of curving lower. We don't have an uptick yet on the MACD. We've got a bit of an uptick on the RSI. So what I'd be looking for here is Tesla's implied volatility to break below the lower Bollinger Band, which would mean options would get even cheaper. And that'd be a great time to buy options, whether you want to buy puts or calls, because they'd be super cheap. Or I would look for a sharp reversal here. And if Tesla went above its upper Bollinger Band, that would mean there'd be this sudden spike in implied volatility, which would also mean those options that I just bought down here would be likely more valuable, so I could sell them for a profit. I'd also be looking to then sell maybe puts or some spread trades once this popped above that upper Bollinger Band, which would likely correspond with a spike here on the RSI and then a spike here on the MACD. So again, these are how we could use 3 or 4 of these really popular technical analysis tools on the IVX, right? Not on the spot price. Another one that I like to use, so a lot of times people ask me, I like to use parabolic SAR, to help identify, the trend. And then the other one I like is stochastic. So we can see, I'm using all of these to just verify whatever my trading theory is, which right now would likely be, it's a great time to buy Tesla options because they're cheap, relative to what they normally cost. So again, if I minimized this view, right, and I came here, I could add my favorite, IVP, hit apply. And then I can look at the IVX, I can look at the historical volatility. And what this makes clear to me is that the IVP at 0.40. So looking at this chart, I knew we would be somewhere below 0.5. And the reason why I knew that is because how low the implied volatility was on all these technical indicators. So I knew even without running that number and pulling it up here to be something at 0.5 or below. And that's just something that you get good at over time using the platform. And here we are, 0.4. So, what this means is that Tesla's current IVX 4409 has only been has been lower than this, over 60% of the time. So essentially, what we're saying is 60% of the time, Tesla's implied volatility has been higher than what it is today. So buying the options are cheaper than they have been historically. If you're looking to buy today, also probably not a great time to sell options because they're historically cheap relative to where implied volatility normally is for Tesla. So that is a great way that these fundamentals kind of play hand in hand with the chart and the technicals over here. Other interesting things, again, charts from the stock monitor view are here. So let's say, we had our trading theory, and we wanted to look at what would happen. Let's go to Apple because, Tesla, is a bit boring as it relates to Tesla at this point. But with Apple, it's kind of coiled. All of those indicators are coiling, and Apple could break out either higher or lower, depending on what happens, let's say over the past or next month or two. So I could come out to the next month expiration. This is about 45 days worth of trading between now and then, 45 calendar days. So we're at September 15th. And here's the other charting views you have available to you within the stock monitor. So let's look at something at the money. So Apple's price is 195 right now. Let's look at the 195 strike price here in the options chain. And let's look at time skew. So this is a time skew chart. And what it's showing you is implied volatility here on the y-axis and historical volatility, the maturity here on the x-axis. And so what we're looking at is these are options that expire in 3 days, which is this Friday, 2 weeks, a month from now, 45 days, 108, 171, and so on. So, what we see is that Apple has this implied volatility for both puts and calls that's much higher in the short term than what it is looking out. So now could be an excellent time, to sell options. And the reason why this is the case is typically earnings. So if there's an upcoming earnings announcement, you'll see short-term implied volatility higher than long-term, right? Because anything can happen in the short term, yet the long-term becomes a bit more predictable. So this is a really cool chart you could pull up, and you could also see how it's different, because you could come to Microsoft, right? And you could come to the same expiration. You could click on the same thing, which is 340. This is like the at the money option. And you can see, it's a bit similar with Microsoft where the short term is higher than the intermediate term. But then what's interesting about Microsoft is you see this big spike into the future, right? And, this difference between puts and calls. And that could be for many reasons. That could be because they're trying to buy Activision and nobody knows if that's going to get approved by regulators. So the market makers are having some fun out here in the future and in the short term. And then the intermediate, it's a bit boring. Then you can come to Tesla just for fun. We could come out to September 15th. We can look at the at the money, 260. And we could see we have kind of the opposite here. We have a little bit of short-term volatility. And then we have this big spike in implied volatility looking right at after the 45-day mark. So again, it could be interesting maybe to sell options out here, whereas it could be very interesting to buy options on this side of the curve because they'd be cheaper. So that's how you use those time skew charts. Let's come back to Apple here and then continue to use this as our example. And then we come here. The other thing you could see is price and implied volatility history chart. So this is cool because we're looking at the money strike, which is this 195. Here's our bid, our ask. Those are always pretty similar unless you have a very illiquid name with a bit wide bid ask spread. But for a name as liquid as Apple, they're going to be pretty tight. And then last price, which is pretty much what I skip ahead to because at the end of the day, last price is the judge, jury, and executioner of the trade, as many have heard me say before. And then there's implied volatility. So you can see this thing has been boring as can be today, which we kind of saw on the chart as well. Apple's coiling for some kind of move, either higher or lower. So really the implied volatility hasn't gone anywhere. But, for certain strikes, you'll see in certain names, this big spike when the market opens. This is 9:30 a.m. Eastern. Or you'll see a big decline when the market opens, kind of depending on what's going on with the underlying stock. And then table. This is another one of my favorite views because it shows the exact bid, ask, and last price, which obviously is typically, the average of these two, the bid and ask, and then the exact implied volatility for this strike price, and then how many contracts traded hands. So this is where actual money on this strike is trading hands throughout the day, which I think is really cool to follow. So you can see where big money starts to come in these big blocks of trades, right? So a whale kind of getting into their position in equal allotments of 1,515 contracts at a time. So those are some really cool charting views that you can look. The other thing you could do from this view is the probability calculator. I normally cover this when I cover the P&L calc, but it is right next to the charts. A lot of people end up clicking on it, sometimes accidentally, but basically just real quick, high level view. What it does is it helps you, determine the probability of the stock moving in either direction. So with Apple, we're kind of undecided. We don't really know if it's going to go higher or lower based on what we saw on the chart. So what we could do is we could say, well, when this option expires on September 15th, that's 45 days from now, what are the odds, right? We're looking at this 195. What if we bought something around 195? What are the odds that Apple will be below price 1? So this is price 1. And then we're going to say, what are the odds Apple will be above X price, which is our price 2? So we could say, well, what are the likelihoods that this thing is going to break higher? So I could put a higher price. I typically do the lower price in P1, the higher price in P2, hit this green and white arrow. And we can see that there's a 47% chance Apple will be below 195. And so kind of, more or less 50-50. So I don't know that it would make a lot of sense to go wildly bullish here. If to buy this call would cost around $6.50, per contract, so $650. And I'm not confident that $650 would turn into more than $650 if there's a 47% chance we could be below 195. And on the same token, there's only a 29% chance rather that will be above 205. So in the same token, it doesn't really make sense, even though these call options are cheaper. Probably doesn't make sense for me to buy those call options because I'd still lose money. They would expire worthless. You could do, the flip side though. You could obviously think of it from the put side of the equation. So if I was selling puts, I could say, well, all right, this thing might not go higher, but what's the chance that it goes, lower? So 190 and then 200, change those numbers a bit. So there's only a 34% chance that Apple would be below 190. So maybe in this case, it makes the most sense to come in and maybe sell this put option, right? Because maybe I like Apple at current prices. I can earn this premium here, this let's say 50, so $350 just by selling this put. And there's only a 34% chance I'd get put on September 15th, right? And on the same token, it really wouldn't make sense for me to take any of that premium and buy a call because those calls are expensive, and the likelihood of Apple going above, even 200 here is low, right? So this is why the probability calculator is excellent, because you could kind of combine what your takeaway is on the chart and play around with some strike prices and some strategies here and the probability calculator. On the options side of the calculator, you can also play around with things like days to expiration. What if there's only 20 days left? And what if implied volatility goes from 22 to 32, for an example? And you could see what happens to the pricing, right? So, the put, even though we're closer to expiration, so this time decay is kicking in if we sell this put, still by implied volatility going from 22 to 32, the price of the put spikes, from its current price at like 350 to 530. So you could see the huge impact implied volatility really does have on options pricing. So you can kind of play your own mini market maker over here. You can also play around with interest rates and dividend rates if you so choose. I typically don't, but feel free. So other things you could look at from this view, we have our end of day charts, right? So this is going to show you end of day activity. We have our period. So these are our expirations down here, 30 days, 60 day, 90, 120, 150, 180. So again, you're able to see for at the money implied volatility, what it looks like. In the short term, it's relatively high, bottoms out. And then as we go further out, implied volatility goes much higher. So again, if I was selling options, I'd be doing it here, short-term expirations, and I'd be doing it here. And then I'd be buying these because they're cheaper. And then you also we have the delta skew, right? So here we have the skew percentage on the y-axis. And then again, we have our same maturities here, 30 days out to 1080. And you could see the delta using 0.1 and then 0.25. And then we have the delta butterfly as well. So depending on if you find that useful, you could pull that up under this EOD charts. We also have a volatility surface. So this is looking at things along different moneyness, right? So this is the expirations here, 30 days, 60 days. These are the options that expire in 1,080 days. And then this is how far something's out of the money. So this is minus 60% out of the money. Here's our in the money. And then this is 60% in the other direction, right? And so depending on, if you like to trade at the money, near the money, or far out of the money, you could look at the different moneyness and look at the implied volatilities, within this chart. So that's also useful if you are into that type of information. And if you want to get that granular, speaking of getting granular, what we'll show next Tuesday is the specific charting tab. And if that disappears for you for any reason, or if any of these disappear for you for any reason, all you ever have to do is click on this handy plus icon. And then you can choose, the stock monitor, futures monitor. We'll cover those, in different webinars, and then charts. And so this would pull up a brand new charts tab. You can have as many of these charts tabs up as you want, depending on what your computer can handle processing wise. And then what's cool about this tab is it really allows you to do a deep dive. So what's great about what we were showing earlier is you can mark it up, you can isolate for implied volatility, you have 5 years worth of data, and you can apply technical analysis. So that's what's great about that other view. What's great about this view is we have 10 chart types available: spot price, implied volatility, single contract analyzer, which is what we were looking at a moment ago from the options chain view, implied volatility index, total option open interest and volume, historical volatility, term structure, skew chart, IV premium chart, and IV difference. So we touched on the single contract analyzer and the skew chart and the term structure in that prior view. But what we'll do next week is we'll really look at, how to use these charts, because on each chart, what you could do is you can add up to 8 inputs on each one of these charts, which means across 10 charts, you could have 80 different inputs that you're analyzing. You could compare spot prices, you could compare implied volatilities, you could compare historical volatilities, you could compare the difference between Tesla's implied volatility and Apple's implied volatility. You could see where they tend to maybe trade in parity, but they've dissected. So maybe there's some interesting reversion of the mean trades. So anyways, we'll do that next Tuesday, where we'll go through each one of these charting types. We're at 12:45 now, so I don't want to go too long. I'm sure it's a busy Tuesday for everyone. And I want to really keep this super digestible and interesting, so we have our key takeaways and know how to apply those. So I want to pause for a second for questions. If you don't mind just typing them into the chat box, that'd be very helpful for me. I'm going to pause for a little water here. I'm also going to put this just real quick. So also here, again, remember, if you're not a user, or if you think of a question after this webinar, shoot us a note, support at IVolLive, so we can get you all squared away. Let me redo these. Previous recordings available for viewing. Yes, so we're revamping our entire YouTube page. As soon as it's live again, we will have everything visible. In the meantime, we have them in invisible mode, so they're still available. But what we'll do is I'll have our team email out the link, not only for this one, but for the past charting ones to everybody that registered today, kind of as a bonus. So you can watch those at your leisure. All right, so we'll make sure to get those out. Looks like that's the main question. Yep, no problem. And then also too, we're always soliciting feedback. We like to know what you guys think of these. So, IVolLive is a very powerful platform. It can be overwhelming if you don't kind of know how to use it in bite-sized chunks. So, always looking for feedback on whether you guys enjoy these. And so please, shoot any notes that you have to that, support at IVolatility.com. We review every single one of them. And we like to know what our users find helpful and then do more of that. And then less of what's not helpful, of course. So I appreciate everybody tuning in today. Again, thank you for the kind words. It's my pleasure. I hope this was very useful. And then until next Tuesday, we'll take a deeper dive. And until then, happy trading. You're welcome. Thank you. Welcome. Thank you, guys. Thank you for the kind words.